So let's see the video about the conversation between Sauda and her sister who want to know the detail about Islamic money market. So let's get started.
Sister, what is the mean of Islamic money market?
Okay, actually Islamic money market is a financial market transactions in wholesale short-term funds. The most common tenure is more and equal to 3 months, and this market usually for short and debts. In many countries, transactions in the primary and secondary markets may take place over the counter via an electronic telecommunication system or voice communication, whilst others are concluded in an exchange market. Money market instruments are essentially IOU issued by governments, financial institutions, and large corporations. It can be traded in very high denomination but have limited access for the individual investors. The Islamic money market operation in Malaysia is unique because in Malaysia, the settlement of large value payment within the Islamic banking sector is conducted via a separate system of Islamic current account maintained at Bank Negara Malaysia. This separation ensures a clear segregation of funds between conventional and Islamic banking. Liquidity in both systems are linked given third-party payments between banking customers in the two sectors, as well as participation of conventional banking institutions in Islamic banking products.
What is the function of Islamic money market?
There are several functions of Islamic money market, which firstly investment opportunities, which the Islamic money market provides opportunities for investment of surplus funds in various Islamic instruments which are Sharia compliant, such as Mudarabah, Bai al-Din, and Bai al-Ina. Additionally, many investors use the Islamic money market as an interim investment potential that provide a higher return than holding cash or money in banks. Secondly, working capital, which provide a means to fulfill the working capital requirement for business and to provide the government short-term funds as a substitution and tax collection. Thirdly, liquidity, which provide a means of raising funds by converting securities and financial assets in the form of cash. Fourthly, warehouse of surplus funds, which firm or financial institutions can store surplus funds until they are needed. Similarly, the Islamic money market provides a low-cost source of fund to firms, the government and intermediaries that need a short-term infusion of funds. And last but not least is policy determination, which enable adherence to government policies aimed at achieving the goals of high employment, low inflation, economic growth, and stability.
So, what is the difference of Islamic money market and conventional money market?
So many of the banks have issued the dual banking system where they offer the Islamic money market instruments and conventional money market instrument in one central place, such as bank. This will make the customer easy to reach or buy the instruments. However, there are a few differences of the Islamic money market instrument and conventional money market instrument that society need to know. Islamic finance have been introduced for decades. Different financial instruments have been invented to compete with its conventional counterparts. Islamic financial products are believed to be based on profit and loss sharing paradigm, by which financial institutions and investors share the profit and loss together. In contrast, conventional financial products have the fixed interest rate. Financial institutions bear no risk at all. Interest rate is highly influenced by economic policies. For example, the monetary policy and fiscal policy of the government change the demand and supply of loan-able fund and change the amount of currency in the money market. Thus, usually the movement of economic policies issued by the government should have a high correlation with the movement of interest rate. However, According to the definition of Islamic financial product, example, mudarabah, murabahah and wakalah, the profit rate should not be highly influenced by the economic policy but should be related to the real economy. However, there are also findings which advocate Islamic financing being different from conventional financing. The findings indicate the advantages of Islamic financing, like Islamic financing profit rate which can adjust to equilibrium in a fast speed than the conventional interest rate. The comparison between Islamic and conventional money market instruments are firstly is based on issuance process. For the Islamic, it must be approved by the relevant financial regulator as well as by the relevant Sharia authority. For example, in the case of Malaysia, Sharia Committee of the respective bank and the SAC of Bank Negara Malaysia. While for the conventional, it must be approved by the relevant financial regulator only. Next comparison is based on their type of structure, where the Islamic structure based on assets, equity and debt. They utilize Sharia compliant contracts such as mudarabah, murabahah and wakalah, while conventional is structured based on loan contract only. Then investors for Islamic is both Islamic and conventional investors, while for the conventional it accept the conventional investors only. So in conclusion, Islamic financial products are believed to be based on profit and loss sharing paradigm by which financial institutions and investors share the profit and loss together. Many of people make strong criticism against the Islamic banks for its replications of the conventional financial institutions. However, some advocate Islamic bank for the incentives of real profitable economic behavior it brings to the market. Thus, Islamic financial instruments are not so bad as being described in those criticism, but both the uniqueness of Islamic financial product and similarity of Islamic financial product, for example, mudarabah, with the conventional interest rate exists in today's Islamic money market, and more effort should be made by headquarters of Islamic financial institutions to make Islamic finance more independent from the interest based on financial system and make Islamic finance to be a catalyst for the development of the real economy.
Oh, I see. Now, I can differentiate between Islamic money market and conventional money market. Thank you for the information.
Thank you for watching and I hope that you enjoy this video.